Money making money making money.
Come on, you gotta tell me, how is this even possible?
It's easy. 1, you take your money and you put it in this secret spot. 2, you let that money grow with compound interest. 3, then you find a place for that money to go where it can work for you. 4, and then every Wednesday at 1 p.m. Eastern, you join me for a wealth webinar.
I'll do it.
It's free. Plus, if you join me now, you'll get my free ebook that teaches you to get all the money back for every car you buy, drive, and own. So take advantage of this opportunity and I'll see you there.
Hey, are you ready to take control of your financial future? Welcome to Private Money Club. Private Money Club is the ultimate online platform connecting real estate entrepreneurs with private money lenders just like you. Whether you're looking to fund your next deal or lend money to grow your wealth, Private Money Club is your go-to resource. You can post deals, find funding, connect with other like-minded professionals. It's just a community. It's a community that you need to plug into. If you're new to the game, no problem. Our Learn platform and our weekly coaching webinars and our on-demand resources are here to guide you every step of the way. Join a thriving network of real estate experts who are already making an impact and they're waiting to partner with you. So Private Money Club gives you the tools, the training, the connections, and everything you need to achieve your financial goals. So why don't you start now by going to privatemoneyclub.com. We'll see you inside. Hey, you need to become your own bank. And it's as simple as changing one thing, and that is where your money goes first. I mean, think about it. Household debts in this country are at all-time highs. You got tons of market volatility. You got the potential for Social Security running out of money. You've got global uncertainty, political divide, and you have to figure out where you're going to put your hard-earned savings. I mean, this is one of those times in history where the rich are getting richer, and it is time to learn the secrets of the wealthy. But here's the good news. Every single Wednesday at 1 p.m. Eastern Standard Time, I put on a free webinar where I teach you how to take back control of your money by teaching you how to become your own bank. So click the link below and let's get started.
So let's go into the app, because the app was created after a dating site, believe it or not. So people with money and people that need money. Phone, swipe left. Swipe left. Ooh, I like that one. Swipe right. You want to go on. If you got money, you want to swipe left through all the deals. When you find one you like, boom, you're connected. How much more difficult does this really need to be? This isn't rocket science. They want you to think it is because they want control of your money. It is time to take back control of our money. I want to invite you to a free interactive webinar that we're doing to teach you how to get prepared for what's about to happen and how you can grow, preserve, and protect your wealth and get it ready for a recession or maybe the next Great Depression. So all I need you to do is click the link below. You're not going to want to miss this with all this stuff going on.
Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris.
So that's what it is. Private Money Club was created for you and for all of us. So I've got something special. Since you're here, you're listening to us talk to you about the infinite banking concept, I wanted to make an offer. Private Money Club is something that will benefit each of you, but we've got what's called the Accelerator. The Private Money Club Accelerator is a coaching program that takes together the knowledge that you'll need to be your own bank and puts it together with the opportunities in Private Money Club so that now you learn and apply the knowledge. Check it out. We got a very special offer for you to be part of the next Accelerator coaching program and get you into Private Money Club so your money starts working for you.
Hey everybody, it's Buff Finance Guy here, ready to show you how to make some serious gains. But not only in the gym, with your wallet too. Most people put their money in the bank doing absolutely nothing for them. But I'm gonna show you how it doesn't have to be that way. So take Andrew here. His money has just been sitting lazy in the bank. But all he has to do is change one thing, and that's where the money goes first, and everything changes. Just change where your money goes first, silly.
Wait, just one change?
Yeah, that's it. Instead of sending it to the bank, you send it to your very own banking system. Your money can grow and get stronger, just like me.
It's time for Money School TV. You heard it straight from the horse's mouth.
He's been on the fence to come to PMC Money Tank. I'm telling you right now, you're missing out on a treat.
This is the ultimate watering hole for lenders and borrowers.
If you've got decent deals, you'll find the funding for it.
The networking here has been fantastic.
Absolutely phenomenal.
Tremendously beneficial.
Oh my gosh, so many people to network with.
First day, I probably met 5 or 6 people. They show me ideas, I show them ideas. We're actually on stage about 20 minutes ago, and since then, I've already had about 20 people reach out.
There are several people that I probably will be doing business with.
I have like 15 private lenders ready to fund my deals. The people here are amazing and so welcoming.
You walk in, everyone greets you right away. No one is a stranger.
It's just an amazing and comfortable place to be.
There's so much stuff that I've been able to learn that I didn't know. I've had aha moments over and over again.
They talked about normal rates of return, not 6%, we're talking about 10%, but in a way that's ethically sound and stable. It's full disclosure, but helps walk you through everything. They even talk about it on stage of like, we've already made the mistakes, so here we are, and we're teaching you to not make the same mistakes. You get to learn from us, you get to just follow our direction and just see what you can do. I've gotten great things out of the virtual events, but there's no comparison to actually coming here, experiencing the energy, and getting to meet all of the people. Everyone is here looking to grow in some capacity. Being in this environment, it allows you to feed on that and foster that.
During the event, they had a lender-borrower meet and greet, which is pretty cool. It's different when you can spend some time, have a meal together, hang out, joke around. The people are just a blast.
It's so much fun.
The community of the Money Tank PMC, the whole crew with Chris, Stephen, Jonah, everybody, and Joe, they've all helped me out. It's been changing my life.
You're gonna learn something, you're gonna meet someone, and it's definitely gonna make a big difference in your business. Not by a little bit, but by a lot.
I mean, you could stay stuck thinking you can do it on your own. There's a lot of people that I talk to is their issue, and then they come here, and I talk to them a year later, and they've grown so much just by coming to this event.
Started $15,000 in credit card debt. As of today, I have $550,000 out in private lending. That's what this teaches you.
I tell people all the time, you have to get in the room to be around the like-minded people.
Go. It's worth it.
Just come. Do it for yourself. Do it for your business.
Take action. You got to do it.
Come to the event, you don't want to miss it.
Well, the biggest thing I hope that people get is something that they can actually apply in their lives. You know, that's the biggest thing for any of these events that we want. We want people to leave here not just riled up, not just excited, but actually going out and doing something that'll put them in a better financial situation, help their family. And for the speakers, my goal is that they go out and they impact the audience and bring something the audience never had exposure to that allows them to then fill in that piece that they're looking for. I'm going to be talking about more lease options. I'm going to be talking about equity shares. I'm going to be talking about a bunch of fun stuff today. Because again, I'm not here to teach about how to do those deals. I'm here to teach about how to invest in those deals.
Filled with individuals that are like-minded, that are at the top of their craft, they're at the top of their game. And for anybody that's an attendee, it's just a mind-blowing experience.
It's almost going to be hard to speak anywhere else but here because it was such a great experience. I felt like, I don't know. It was amazing. Nothing less than amazing, literally.
At the PMC Money Tank event, which is an epic event that we're putting together that does one thing and one thing only, makes everybody money. It brings people with money together with people that need money. It's like a peanut butter and jelly sandwich. You just smash them together and everybody wins.
Wednesday, 9:30, 10:30 Eastern Standard Time. Do it live!
Oh, yeah. Another week, another What the F happened, joined by my trusted little kitty here, Mr. Cash, and my co-host, Mr. Stephen Nagy. What's happening down there in Florida?
Good morning. Just hot, man. Hot. Miami hit 100 degrees yesterday for the first time in over 80 years. So it's a heat wave, man. It's a heat wave, but we're surviving.
Wow. Well, surviving.
Yeah,
and you know, the other thing that's going on down there is not just the heat, but also your real estate values. Not all, but your real estate values are getting hit, man. I'm hearing about it every day. We're going to cover that today. We're going to cover a lot of things today. We're going to cover retail sales. We're going to cover the yield of the 30-year bond. What does that mean? That is one of the telltale signs, and we're going to get into that a little bit more. We're going to talk about the blue chips and the chip stocks, okay, and what's happening there, why record revenues are not keeping their stock prices where they want them to be. A lot of other things we're going to hit. Stephen, what other things do you want to talk about today?
Yeah, I mean, right off the top, I mean, buckle up, Chris. The 30-year Treasury yield hit its highest level since 2007. Retail sales have cratered. Applied Materials torched the chip trade, all while the Strait of Hormuz standoff with Iran blew past its 60-day deadline, and Trump threatened to bomb the shit out of them. So we're back to just crazy politics, crazy stuff going on. The economy is just going wild. I mean, here in the States, the Supreme Court slapped Trump down again in the E. Jean Carroll case. Sailors on the USS Abraham Lincoln are describing broken toilets and sinking morale after 9 months at sea, and historic flooding killed at least 7 people in Indiana. And because the world needs a laugh, a monkey broke out of a Scottish zoo. A bear broke into a Kentucky Fried Chicken, and a python started.
Oh, yeah, that's a smart-ass bear, man. He's going in for some biscuits.
A python started a school fire, Chris. So I looked at today's show agenda. It's long. There's a lot going on. There's some craziness. So let's get into it, man. You want to start with the economy? What do you think?
Let's start with the economy. And
here we go.
All right, so let's start with retail sales. You know, it's just there's a lot of things that kind of gauge the economy and some leading and lagging indicators. And retail sales, well, they had the biggest drop in over a year. So since May, the numbers have been going down. Right now, the drop was 0.6%. Okay, that was in July. So that is marking like the retail sales. People are just not spending money. There was a spike for the tax returns. So when everybody got their big, beautiful tax returns back, which were clearly more than what they had been in the past. Thank you, Cash. I was having a hard time kind of doing things when he was just taking my entire desk, but that's what cats do. Anyway, but now those tax returns and the tax return money is fading. So online retailers and in-store retailers, including car shops or car dealerships, they're seeing a big decrease in the number of people that are buying. I felt so compelled that this morning I went on to Levi's and I said, you know, I feel terrible for these companies and people are just not buying. So I bought a couple pair of jeans and they were all on sale. So, hey, listen, when retail sales go down, the sales come on. And I don't know, I took advantage of it to get some new jeans. Stephen, what's your take on what's happening in retail and what that actually might mean for the bigger picture?
Yeah, I mean, I can only, assume that it has to do with just the economy, and people are struggling right now. I mean, prices for necessities, things like groceries, food, gasoline to get you places are all just skyrocketed, man. Everything's so expensive. So I assume that just people don't have, as much money right now to spend on retail goods and things that that they want. And on top of that, I mean, you watch the credit card debt in this country, it continues to just skyrocket. I know some of the subprime stuff started to default at rates we haven't seen since 2007. And so when you max out those cards and you have no cash left because it's going to necessities, what are you going to buy stuff with? And I feel like that's where we're at right now.
Yeah. So just to kind of sum up some of the things we've covered in prior weeks, if any of you are here for the first time, looks like we got a lot of the the normals on here. We got David Hammer, we got Frank, we got Lynn, we got Dex, and I'm sure more are coming on. But like we just reported last week that the jobs data, and the jobs reports are not looking so good. You're seeing that there are just not as many jobs, which makes perfect sense because let's say retail sales are down, they're going to cut staff. They're not going to be hiring new people. So therefore, the two work hand in foot with one another. But that's just the tip of the iceberg in terms of telling the story and different signs. These are just like little things that, next month it could pop back up. Next month, retail sales could kind of just skyrocket. We could get into the Christmas season. You could see that skyrocket for years now. And I'll take the heat for this. For years, I've been sitting there saying, oh, retail sales are going to be lower this Christmas. And Stephen always comes out and does those reports in in January. And nope. The Christmas sales have been up. So is this going to be the year that the Christmas sales do not top the prior year? But I think the bigger story here, and I want to carefully explain this because this is a really big one. And, if you're not a financial advisor, you don't study economics, you maybe don't understand this, but you're seeing it in the news. So you got to kind of sit there and ask yourself, what is this telling us? What does this mean? But when you keep seeing that the 30-year yield or the 30-year treasury bond yield is at one of the highest levels. Now, let me preface, at one of the highest levels since, this is a long time ago, 2007. How many of you can tell me what happened 1 year after, not even a full year after this happened in 2007? Y'all remember? I'm not sitting there saying it's going to be the same thing, but I am telling you, these are some of the signs to look at. Being that they've now yields have surged to 5.31. Listen, this is good news for some of you. If you own long-term treasury bonds, which I certainly do, we just got to raise. But we got to raise at the cost of a bigger issue that's coming. And here are some of the things I've been researching this. I talked to David this morning and we were riffing about this, but because we both been, in the Wall Street world, if you will, for better plus of 20 years. So we've seen this before. We heard about this before. We studied this in the Series 7 exam books. When yields spike, there's several things, and you got to kind of go behind the headline news and see it. Stephen's got some of the news stuff up here, but let me just tell you, number one, the news is always quick to blame it on inflation. And inflation is definitely a component of this because it's sticky right now with the Iran war and a seemingly no end to that war or that whatever you want to call it, war. Is it just I don't even know what's going on over there really, but like it's a problem. We've covered it for far too long, so it's just getting beat up. But that is keeping oil prices high. Every time Iran shoots a ship or we shoot a ship or some missiles get launched, oil seems to spike. And oil, if you all know, is in just about every single thing we use. Now, see, this cup here probably doesn't have oil, and I hope to God the coffee in it doesn't have oil. But this pen, yeah, definitely got oil in it. This mouse, mostly oil. So that you can see, like, no matter what we touch, oil affects the price of it. So if oil remains $80, $90 a barrel or higher, it keeps the price of everything higher, which is inflationary. So therefore, we've got this problem with inflation. So therefore, the Fed is not willing to drop rates, which would be a blessing for real estate and all real estate investors, which we'll cover in a second, because that's a bloody tragedy what's going on in real estate. But that's the first thing. So you got inflation. I think the more important thing to look at here is how the world and the world bond buyers, we'll talk those of Japan. Japan's got their own issues now with the yen and all the other stuff going on over there, which we're bailing them out. But, all the other countries that would typically buy our bonds, because our bonds are the nicest house in a crappy neighborhood. So they pay good for the people that buy them, and they're safe. They've never defaulted. But when those big buyers insurance companies are still buying them, but when they're looking at it saying, hey, wait a second, is the juice worth the squeeze? When they look at it, they look at the yield, because they're going to get that yield, and it's, a 30-year bond is what we're talking. 10s are no different. But they look at it and they say, okay, with all the debt the U.S. has, can they continue to sustain these debt payments? Again, we've never defaulted. We have the printing press. So my answer would be yes, we can, as long as our dollar remains strong. And as long as our dollar is what oil is valued in, which, UAE and some things that happened after World War II are the reasons why the dollar is the almighty. But they're looking at it saying this maybe isn't good. So the bond yield has to go up to attract buyers. And let me throw one final thing, and this is what you're probably not going to read about in the headlines, maybe a little bit, but you might not understand it. With this AI surge, you've got companies like Amazon, you've got companies like Google, you got Microsoft, Apple, Anthropic, OpenAI, which are relatively small in the grand scheme, but NVIDIA, all these companies need lots of capital. I mean, absorbent amounts of capital in this AI race. And what they're doing is they're going out and they're spinning up their own bonds. But their bonds, being corporate bonds, pay a higher yield than the US Treasury bonds. So buyers like you, me, and everybody else, we're looking at it. We're saying, okay, and I'm just going to pick on Google. Google Alphabet just spun up a bond and it's paying 6% yield. And then I could buy a 30-year Treasury bond that was paying me 5 to 5.31%. You're weighing it out. You're starting to say, well, I don't know. Google's pretty big. They're pretty safe. Like they're really leading the charge. Maybe I'll take the Google bond, make a little more, and give up the old steady, guarantees of the U.S. Treasury bonds. That's a lot of what's going on here. People have decisions to make. And with the debt, a lot of people are moving to the corporate bond world and moving away from the government bonds. Therefore, yield is going up. I'll tell you this, it's not good. It is not a good indicator at all for the future of the economy, for the future of the markets. I'm just warning you. We've seen this many other times in history. You can do your own due diligence. And I don't mean to beat this up, Stephen. I'm going to end this little rant in a second. But this is one of those things you cannot ignore. And let me explain who I'm talking to. I'm talking to all of you. Any of you that are retiring in the next 5 years, any of you that are already retired, you need to really pay attention to this. Any of you that are taking income from your investments, you need to really pay attention to this. Because if the markets give way, which eventually they will, who knows when, and you got all your money in the markets and you're taking an income, you are going to be in trouble. And again, tying it back to this right here, remember the last time, this is the highest yields have gotten on 30-year Treasury since 2007. And I think all of us know the history of what happened next. Stephen, I went on a long rant there, but what do you have to say about this spike in yields?
No, I mean, there's not much I can add to that. Glancing through this article a little bit, what could send yields even higher? Like you're saying, a little bit about global participation. I was reading over in the comments. David was saying that the Treasury this morning, noticing these higher long-term yields, is trying to save face by announcing the doubling of government debt buybacks. So, if you kind of see this article that they just came out, Treasury doubles debt buybacks as Bessent moves to steady the bond market. The stock market, the Dow and the S&P up this morning. The Dow's was up right off the bell, 200 points off the news of these buybacks. So, they're really dancing this game here. But, reading some of these comments over here, very, very smart comments from our watchers. But, higher yields have, definitely historically been a predictable predictor for what's going to happen. Artificial attempt to bring yields back down. But if you ask me, it's all cosmetic in nature. Let's see. Chris Ash just saying, hey, could it be a financial crisis coming? There's a major.
If you're in real estate, you're already in a financial crisis. So any real estate investors, you already know what I'm talking about there. And there's some bad data, and I don't like it because anyway, we'll get to that.
Yes. Sorry, you keep like every couple minutes like freezing for about 3 seconds, and then it comes back.
Am I really? See, my computer just piece of shit.
Yeah. Jim said he misses your whiteboarding. He said it's a perfect topic for you to go to the whiteboard and explain it in pictures and show the potential paths for the future. I like that.
Yeah, I could do that.
We can do that a little bit on Wealth Webinar later on. The other thing, Chris, I wanted to hit on was, for Ask Me Anything later today. So we do 2 other shows today. If you guys are new to our community, we do Wealth Webinar at 1 p.m. Eastern every Wednesday. Education show that goes in depth on different various financial topics, focusing on the infinite banking concept and becoming your own bank. So join us for that. But we also do an Ask Me Anything happy hour at 4:30 Eastern. And Chris, today I'm going to implement a live call-in so people can call our 866 number and we'll chat with them on air and see what they have to say. So it'd be fun to do something like that with this show also, so we can have people calling in. But anybody want to call in and share their comments on the news, let me know, and maybe we'll try that next week. I think it'll be fun. But with that said, yeah, I mean, the Federal Reserve, new Federal Reserve Chair Kevin Warsh, he's got his hands full, man, right now with this economy, with everything going on.
I wouldn't want his job.
Oh man, no,
definitely wouldn't want his job. I clearly would never want the job of the president, but definitely wouldn't want Warsh's job right now. I feel like he stepped into a hornet's nest. Boy, oh boy, it'll be interesting to see how he plays this and see how smart he really is, because he's going to have to really prove that. But the only thing I'll tell you is, when you're really looking at things, like today, the markets are up. The bond market is always the leading indicator. It's always the indicator you want to look at for what's coming. The stock market's great if you look at it for just today, but the stock market is more lagging because it's based on prior things like earnings and all these things spike it up. So the stock market is not a good gauge. Okay. It never has been and never will be. The bond market, single-handedly, that's what you got to pay attention to, because the bond market gives the signals. The bond market is the truest measure, and it's above and beyond what the government's going to tell you, whether or not the government ever tells you anything that's true. But let me give you another example here of some weaknesses that you're seeing. So chips, right? Chip stocks. You could pick on NVIDIA, you could pick on many of them, but let's pick on Applied Materials. So right now, their stock price dropped 5%. But if you paid attention to Applied Materials, and I think we covered it here, their revenue was like blockbuster, record revenue. So their revenue is up, their earnings are up, but their stock price is down. So you're seeing some of these telltale signs or some of these indicators that just are telling you that things are a little off right now. The market might be a little bit speculative right now. And even our almighty chip stocks are feeling some of that pressure. It just depends on what day you look at it. Now, here's one of the things I want to call out. And this is the only show I would talk about this, but I think this is a major problem for most Americans, because most Americans right now have higher debt than they've ever had. Not all. I'm sure not any of you watching this, but statistically, Americans have higher debt than they've ever had before. And it's not getting paid down. It's going the wrong direction, which indicates that there's a lot of pressure on people from the price impacts of inflation and what inflation has done. But not only that, it also is indicating you that their wages are not keeping pace with inflation. They're not making enough to pay cash or to do these things. Now, some of you might be like, oh, credit card debts are up because they're trying to get the points. No. Like, that would be the case if people were using credit cards and paying them off every month or paying them down. We are not seeing that. But the other thing you gotta really look at, we've been in the longest bull run, I believe, and David, correct me if I'm wrong, and Stephen, the longest ever in history. If I'm not mistaken, this is the longest bull run. So what happens there is this affects multi-generations. So you got the silent generation, you got the baby boomers, you got Gen X, and we'll throw Gen Z in there. All these generations have been through different cycles. And now what you've got a large amount of Gen Zs coming in, and Gen Xers, my generation also, but Gen X has kind of seen and felt the impact of these recessions, but Gen Z has not. And any prior generations or earlier generations, latter generations than Gen Z have never felt the impact of a recession. So therefore, what you get is this false sense of reality where assets are going up, your stocks, your brokerage accounts, your 401ks, they're all going up, and you're just like, oh, everything is good. But what you're not paying attention to is the cracks in the foundation below. Because a lot of folks, and I see this firsthand, they do not believe the stock market can go down. They know it can. Let me rephrase that. They know it can go down, but they don't feel like a recession is anything that's going to happen, because, well, when it's been the longest bull run in history and things have always gone up and my house value's gone up, unless you're in Florida or Sun Belts, my 401k just keeps looking better. My stocks keep looking better. It's very easy for the gurus out there that you see. And I'm not going to pick on Graham Stephan, but Graham Stephan being one of them, he's young. He's telling everybody, like, S&P 500, but he's never felt the impact of a recession. These are the problems. And you know what? Listen, there's nothing we can do. I've been wrong for too long, about what's going on, because you can't time the market. Ray Dalio will be the best one in Principles, his book, to tell you that you can't time the market. And if you do, you could lose everything. And you know what? I've tried timing the market in a roundabout way, trying to tell people and warn people that, hey, something's coming, but nothing happened. And the markets kept going up. So everybody's like, oh, I should have stayed in the market and not listened to Chris. My long-term treasury bonds are down. I'm losing money. But you're not playing the right game. Because when the market turns, it turns really quick, really quick. And when that happens, most people will not have the ability to course correct. You could lose 30% in a week. It's not unfeasible to see that. So you got to just kind of pick and choose, do you want to sleep good at night, or do you want to keep rolling the dice? Because that's really where we're at. And, the retail earnings that we talked about are kind of another one that's hard to look at. Stephen, I'm going to move past the chip stocks and move into retail. Again, we talked about retail sales in the beginning, biggest drop, okay, in over a year. However, these are some of the other things. Let's look at earnings of these retail companies. So this week, we got a lot of earnings coming out. I was just reading an article on Target. So you got Home Depot reporting, Target reporting, Lowe's, and Walmart, all in that retail sector. So Target just increased their outlook, which basically means things are looking good. But again, read down in the line. Maybe Stephen can post that. But if you read in the small print, if you will, retail or Target increased that because they had really strong bottom line profits because they got refunds of their tariffs. They got those tariff refunds, which boosted their bottom line. That doesn't mean anything that their sales are doing better. It doesn't mean more people are going to Target and buying, knickknacks. It just means they had a boost in their bottom line revenue because they got a refund of those tariffs that Trump, wasn't able to kind of place. Stephen, you want to talk a little bit about this?
Yeah, I mean, to your point with the stocks and, young people just not understanding. I mean, if you think about it, since 2009, that's 17 years. So that means a 17-year-old, never an adult in their life, paying attention to things like that. They could be 34 years old today and never seen a bear market, outside of the little COVID, thing that happened. But that's pretty wild if you think about it. You're mid-30s and you've never seen a down market in your lifetime. I mean, in your adult lifetime. But anyways, yeah, I mean, with the retail earnings, like you said, kind of have on the screen here, Home Depot reported yesterday showing modest growth as the housing market deals with low turnover, which we do need to get into the real estate market because it's wild how many lack of buyers there are right now compared to sellers, and just constant price drops of homes is at record levels right now. But Target and Lowe's also reporting, let's see, today Target enters its print up, notably year to date, with investors looking for proof of sustained operational turnaround. So keep an eye on that today, as well as TJX, Walmart closing out the week tomorrow. So keep a close eye on what's going on with those later on.
Yeah,
this
but
week.
in some of those, and again, some of the signals you're going to get from the Walmarts and the Targets, you might get mixed reviews here. So I would look at these earnings and I would kind of take them with a grain of salt. I really would. I mean, unless you own the stock, then you can go celebrate, crack some champagne if they actually come out. But you just got to be really careful. Another thing, and I'm not going to talk like I have a lot of knowledge here, but Trump officials have been meeting a lot, and they're kind of planning for, the midterm pitches. Like what are Republicans going to pitch in midterm? And, Stephen, we don't have it in the agenda, but I just saw that in Florida, wasn't there a Senate seat that went blue or went?
No.
Yeah, so I
No,
swear.
definitely not. Florida is very.
We're going to cover that. Let's pause that. Let's keep going into this. So they're looking to index capital gains to inflation. All right. So another kind of unique way of them kind of getting the inflation numbers to be better. But that's going to come at the expense of tax-free exemption on homes. So that's I don't want that. But this is just one of the things that they're talking about. Stephen, I don't know if you have any more insight on this. I'm not really too versed in exactly what's going on there, but I know it was one of the headline news pieces.
Yeah, just Trump officials are floating a cut to capital gains tax on home sales. They're saying they may be considering a tax break proposal in the lead up to the midterms, including larger capital gains exemptions for homeowners selling their primary residence. Experts say any changes before November are unlikely, and that the policies would most mostly benefit the wealthiest Americans. I don't even know what that means anymore. I feel like just to be middle class, you need to be wealthy these days. So if it helps, most people, that's good. But President Trump is always exploring new ideas to make America wealthy again, but any policy announcements will come from the administration directly. White House spokesperson Kush Desai says. So we'll keep an eye on this. It's just an idea to kind of help people financially in the housing market.
What a lot of people, I think, will say about Trump for years to come is, he says make America wealthy again, but really, I think the telltale sign is there's such a divide between the lower and middle class and the upper class. The upper class is certainly getting wealthier, but the lower class is falling fast, and the middle class is really suffering depending on where you're at in the middle class. And the middle class has always been, just call it the breadwinner of America. It's been the biggest, and it's being pinched more now than ever before, because you've got, you got the lower class and the upper class are kind of the two defining classes. The middle class is just a shrinking pot, I guess is a way to say that. And all these things that they're exploring. And when he says make America great or make America wealthy again, who are they making wealthy? It's more the upper class, but anyway, I'm not trying to start a problem with that, but you can definitely see that people aren't feeling that America is getting wealthier. They're watching the debt in America go up. They're watching the average person is watching their balances go down, and they're watching their credit card balances go up, and they're having a harder and harder time affording just normal everyday living. And I want to move this into the next segment, which is mortgages. And then I want to follow that up with real estate, because I think these two, we can finish this segment of the economy. And these are two of the scariest things that we're seeing. So right now, mortgage rates, we had a little ease in the mortgage rates, but don't get excited about that, because that was before these treasury bond yields started spiking. And if the 10-year treasury holds higher, like that's not going to be good for mortgage rates. So you got this ping ponging of mortgage rates, and they saw a little bit of an uptick in mortgage applications, but it's hardly worth really talking about. But the thing that's really worth talking about is real estate. Right now, this is crazy. The number of homes, try to say this right, Stephen, if you want to pull this up, but the number of homes to buyers, okay, is at a record level never seen before. We have more homes, okay, so basically here's a way of saying it. Home buyers have fallen to the lowest level, not since 2007, but ever. Home buyers are at the lowest level ever. And you know what? Let's combat that. When you go back and you look at the statistics, you can see the number of homes on the market far, far outpace the number of buyers in the market. Now, a lot of the market problem is, well, people can't afford houses at the current prices. So we got this little conundrum, and I've been talking about this too long, so I'm not going to beat it up, but you got this conundrum where, it's just typical economics, supply and demand, right? So right now you've got elevated levels of supply, and you have the lowest level of demand ever recorded in history. And then in the middle, if we just throw like the little, what could move this, you got interest rates. So when interest rates are elevated or mortgage rates are elevated, you pinch out the majority of the buyers that could potentially buy these houses. Secondarily, price. The buyers that there are want housing that is at a lower price. Now, the one thing that hasn't really been affected, at least here and in many other places, is the high-end houses. Those are still selling, which is kind of typical for an end of a cycle kind of thing. You're seeing high-end houses still selling, because remember, the wealthy have the resources because they're asset heavy. They got the assets have gone up, so they've got the money to continue to buy these high-end houses. But the middle of the road houses, where the demand really is, they're overpriced. Or I shouldn't say they're overpriced. They're priced out of the buyer's range. And that is resulting in this. So when you look at real estate, and we've been saying this, and we see it firsthand with Private Money Club. There's still lots of good deals on Private Money Club, lots of good borrowers on Private Money Club, but they've had to get a lot smarter in what they're buying, because right now, like the buyers, there just isn't a lot of them. So you got to really pay attention to what buyers there are, what price points they're looking for, and produce a product for them. Where builders, the problem with builders right now is they quite frankly can't produce a house, maybe with some of the new technology and things like that. But like as a whole, builders cannot build a house that fits that need, the majority of the need. So you've got a major issue. I don't want to sit here and, say this in some way, shape, or form. Feels a little bit like 2005, 6, and 7, but it kind of feels like 2005, 6, 7. Like you just had all these builders that were building. And they keep saying, oh no, there's no systematic risk in the banks. And they keep saying, oh no, there's plenty of demand. There's so much demand for housing. Yeah, but the housing stock is the wrong stock. So you got supply and demand, back to that little teeter-totter, right? You got high supply, low demand. What has to happen? I'll tell you what has to happen. It's the same thing you're seeing in Florida. I don't mean to keep picking on them, but there's a bunch of places in Florida that are seeing 10 to 15% drops in their pricing. Now it's stabilized. Same thing in Texas. Texas prices have come down. I don't know how to speak for Arizona and some of the other hot markets, but you have to see the price come down to meet the demand. There is no other way. If the Fed doesn't drop interest rates, that's the only thing that can happen. Tell me if I'm wrong here. I could be completely off pace, but like this is pretty basic economics. Stephen, what do you have to say about this? Because this is the cherry on the top here for the economy. That's just terrible thing.
Yeah, I mean, real estate is always an interesting one because it's so localized, I guess. It's regional. It's different by state, by different parts of the country. Like in Florida, you keep talking about Florida. Like there's parts of Florida where real estate's still booming. There's parts of Florida where it's really starting to take a hit and prices are dropping fast. And so, how do you look at the overall picture of that? I don't know, but just to give you overall in Florida, since we were talking about it, medium list price right now is $415 to $425. Medium sale price hovers around $390,000. The market has cooled roughly 2.3% year over year. So giving buyers more negotiation room. About 97 sale to list ratio is about 97%. So most houses are selling for below listing price. So you could say medium list 425, medium sold 395. Price per square foot, 275, days on market, 75, which shows a balanced, cool market. At the peak of things, I mean, things were selling 30, 35 days. It was like crazy. They're flying off the shelves. And of course, it's very, localized. Places like Naples and Miami, higher end places, your average $700,000. Bigger cities like Orlando, Jacksonville, obviously have a more diverse, type of houses and population. So but it's starting to happen, man. I mean, we see it every single day with different investor deals and different development deals. And, like you said, people are struggling to get money from banks and getting these deals done. And I don't know if it's a lack of demand. Are we seeing too much supply again? I mean, I will never forget, Chris, after 2008. I mean, it was just, the real estate boom was insane. There was developments going up everywhere. People were paving roads and installing sidewalks and foundations and getting ready to build these huge communities. And it all just stopped. And you go back 10, 15, 20 years later, even to this day, there's still some of those communities that just look like ghost towns. Yep. Just hundreds of just paths and old worn down roads and weeds growing everywhere. What was going to be a big, beautiful, some of these communities even have the entrance ways with a big, huge, entrance house and the security gates that they were going to put up and the walls and just nothing beyond them. And I'll never forget it, man. It's, to me, it's reminiscent of that again right now. It just,
I love the comments are awesome. I mean, like you got a bunch of real estate professionals on here, like Lisa, talking about this and showing you like everything we're saying, you're seeing it firsthand. This isn't just the headlines. This isn't just the news. This isn't just Chris and Stephen and Cash ranting on about like the issues. Like there's your firsthand look at it. Like look at what they're all saying. Welcome, Tom. We got Craig coming in. We got Lisa Menconi. We got David commenting, and all this is great. And we went long on the economy because I think that's a telltale sign that everybody needs to hear. And I know we normally have like 50, 60 people on here between Instagram, YouTube, Facebook. That's 50 to 60 people that are smarter for attending the show. Now I know, we're probably not going to have the big rants that we have in the past, and some of you love that, but like just read the small print here, and you're seeing it. 100% seeing it. And I don't know, like what a lot of people don't think is possible. I go back to that one post I put where I posted a whole bunch of third-party people that were talking about the real estate market and how pricing is going to come down. And dude, I get beat up. There's thousands of comments on that post, and all of them, for the most part, are telling me I'm wrong and that the people that I kind of put on that video are wrong and prices aren't going to go down. And they're like, oh, there's so much demand. Housing demand has never been higher. I'm like, you don't even understand what you're saying. Like, there is a lot of demand, but the demand is for a price that doesn't really exist and can exist in this pricing environment. You just can't. Like, the builders and even flippers can't build the product with the price of goods because inflation and oil and all these things are playing into an almost impossible game. I pity the fool who's in real estate. I don't mean to say it that way, but I feel terrible for people that are in real estate right now. Some of them are crushing it, don't get me wrong, and some of them are really, really having a hard time. I talked to flippers. We just had a meeting last week here, a PMC pop-up, and I was talking to real estate investors there. It's freaking tough out there. Pricing is high. Nobody wants to sell their house at what is a fair price, and the margins are so thin that I just don't know how flippers are going to make it in this environment. I just don't. But Stephen, let's kick this thing into high gear and go into the USA and talk a little bit about what's happening here.
Right. Hey, are you ready to take control of your financial future? Welcome to Private Money Club. Private Money Club is the ultimate online platform connecting real estate entrepreneurs with private money lenders just like you. Whether you're looking to fund your next deal or lend money to grow your wealth, Private Money Club is your go-to resource. You can post deals, find funding, connect with other like-minded professionals. It's just a community. It's a community that you need to plug into. If you're new to the game, no problem. Our Learn platform and our weekly coaching webinars and our on-demand resources are here to guide you every step of the way. Join a thriving network of real estate experts who are already making an impact, and they're waiting to partner with you. So Private Money Club gives you the tools, the training, the connections, and everything you need to achieve your financial goals. So why don't you start now by going to privatemoneyclub.com. We'll see you inside.
My fellow Americans.
So you know the thing. All right, Steve, why don't you kick us off for this segment? I did way too much talking in that first one. So like, what's happening out there? I know the Supreme Court's, creating some fun headlines. Take it from there.
Yeah, I don't really know the story, so let's check it out. So Supreme Court turns away Trump's latest bid to block the E. Jean Carroll Award. Trump filed an unusual request asking the justices to reconsider their decision not to hear his case several weeks ago. Supreme Court Monday declined for a second time to take up his bid to overturn the jury verdict that awarded $5 million to E. Jean Carroll and found Trump liable for sexual abuse and defamation. An unusual move. The president asked the court to reconsider its decision. Already turned over $5 million plus interest. The case arose from a federal lawsuit Carroll filed in New York City.
I think everybody remembers that.
Yeah, just back and forth. I mean,
I think that the takeaway here is you can't say Trump isn't a freaking consistent and persistent son of a pup, man. He has been trying to overturn this thing. I mean, I guess he doesn't want to write the check, but I mean, like $5 million plus interest, to Trump is nothing. I think it's more about principle, but yeah. He does not seem to be winning that battle. What else is happening there?
It's purely principle because it says he already paid her the $5 million plus interest. So
okay.
The money's gone. He's just pure principle.
He's trying to probably get her to spend money on legal to take back the $5 million, and the attorneys get it back. He's probably just being a son of a pup. I don't, whatever.
Yeah. If you ever thought lawfare was not a real thing, just follow Trump's political journey and how much they've gone after him with stuff like that lawsuit. It's just it's truly, it's kind of scary to tell you the truth that happens in the United States of America. It's shit that you would typically see in the third world. But here we are, man. Politics have gotten very dirty. We just had elections in Florida yesterday, Chris.
I know. And right up here, Maureen, I told you it happened. And I know you didn't want to believe it, but it did. Where is Maureen's post here? I know right there. Florida gave up a seat for a socialist in a vote yesterday. I shit you not, man. It actually happened.
Well, no, yesterday was primary votes.
I get it, but they gave up a seat.
Not that I'm aware of. That's not true. I
Okay,
don't know.
well, we'll debate that one in a little bit. I could be off. This morning
No,
at 6 a.m. drinking my coffee, I was scrolling through the news feeds and I'm like, oh, wow, in Florida? That happened in Florida? I didn't think that would be possible, but it appears that it did happen. I don't know. Anyone got any more info on that?
Well, what did happen? Well, the primaries, the votes for who is going to be the candidate for governor, for senator, things like that. And so, as well as all the local elections, county commissioner, school board, stuff like that. I did go vote right before they closed yesterday. I was there about 6:50, right before it closed at 7. But for governor, because Ron DeSantis' term limited out so he can no longer run, one of the most popular and probably most successful governors in Florida history, just what he's been able to accomplish down here. So his kind of lieutenant governor, and I think his pick, he never endorsed anyone, but he wanted this guy, Jay Collins. Byron Donalds is a guy that's kind of the mainstream Republican candidate who Trump endorsed and had all the backing of everybody. Donalds did win on the Republican side. But the surprise came on the Democratic side for governor, where this guy Vindman, who was like the Democrats' hero, he was the guy that made up all that Trump collusion hoax stuff when it came to Russia many years ago. He was kind of the leader of all that stuff, and it all came out. But anyways, he's like the establishment Democrat, had $20 million backing him, and he got beat by this DSA candidate, who the Democrat Socialists of America. She barely raised any money. He outspent her like 20-1, and she won. So I guess the Democrats that are in Florida really like that socialist stuff. Not my thing. She's more than likely going to get destroyed because Florida's pretty conservative at this point. But that was the surprise on the Democrat side. Not aware of any seats being.
Well, I stand corrected. And, if any of you just listened to Steven's rant there, like if you ever think he doesn't know a thing or two, like double think that. Like he definitely has his shit in order. I sometimes just say random stuff just to spur some kind of a rebuttal back. Let's talk, this Iran war straight, saga is just, it's really hard to watch because one day you think they're coming together and they're going to come up with a truce or an agreement. And the next day they're lobbing missiles at one another. And the next day they're shooting ships. And it's just, dude, I can't make sense of it. But there is a story that I read on the USS Abraham, which is one of the ships over in the Strait. And there's a saga going on there on that ship as well. And probably not good for the sailors that are aboard that. Steven, you want to hit on that one?
Yeah, I mean, CNN reporting, so take it with a grain of salt. But sailors on carriers like the USS Abraham Lincoln feel the strain as Navy deployments stretch longer. They're in the midst of a record-setting deployment, kept out of port for more than 6 months as the carrier's crew faces morale and mental health concerns. The ship may break a record for longest trip away from its home port for a U.S. carrier since the Vietnam War. That record was set just months ago by the USS Gerald Ford after that ship completed a 326-day deployment that included operations against Iran and Venezuela, part of a pattern with the U.S. Navy increasingly asking its aircraft carrier groups to exceed the service's recommended deployment duration of 7 months. According to a CNN analysis, experts and former officials have warned that the trend could place more stress on the ships and lead to burnout among sailors, or even push some to leave the Navy altogether. On the other side, the Pentagon and defense-friendly commentators say reports are exaggerated, insist the Navy is doing everything possible to resupply the ship, and frame extended deployments as the cost of standing firm against Iran. So at the end of the day, you feel for soldiers. It's people that serve in the military. It's why we support them and give them everything we can. It's why I will back, any kind of proposals, laws that help our veterans, that make things better, because they do go out and they do give up their lives to protect the country. I think the real argument is, is that needed? I mean, at the end of the day, that's kind of their job to be there. I don't want to be insensitive. And again, I feel for them, especially those with families. But, we are in the middle of a lot of conflicts in this world right now. There's a lot of people that want to do the U.S. a lot of harm. So God bless them. And, hopefully they can make it back to their home port sooner than later.
Just recently, and I always like to give shout out to, our veterans and our military, thank you for your service. But I was at the fair, me and the the little one, and Larissa went to the fair, and it was really, I have made it a practice, and I teach my daughter this. When you see somebody that has a hat that looks like they were a veteran, or that if they're in the outfit, you always thank them for their service. And I don't know if it's a fair thing, but there was a ton of Vietnam vets, Iraq vets, like people that just, they had the hats on, and I felt like I was constantly like, thank you for your service. Thank you for your service. But like, I tried not to miss a single opportunity, and they're not hard to spot, right? The hat, like it's got the yellow writing on it. You can just tell it. You don't have to really be observant to notice this. Many of them, they're older, they're in wheelchairs. Thank a vet. Thank them for the service, because the freedom we have here is not free at all. We take it for granted. And I love that my daughter sees this happening, because I make her see it. I say, oh, hey, make sure you say thank you. And every once in a while, if we were stopped and we saw a vet or somebody that was in, because there was a bunch of uniformed folks there, because they had booths. And I would tell my daughter, say thank you. And she would just say thank you. She maybe didn't totally understand it, but I'm trying to get her used to that. And I think, listen, those little things that matter, those little things. But moving past that, Indiana had a wicked flood, and 7 people are dead. 128,000 people lost power, and there was huge evacuations. It's, I don't know if it's that season, but that was a pretty nasty one. Stephen, do you want to comment on the Indiana floods? I know it took the headlines for a couple of days.
Yeah, it's been wild weather this summer. I mean, everyone I talk to around the country is say it's record hot heat. Like I said, it's been hot down here in Miami, 100-degree day for the first time in 80 years. So it's definitely been wild weather, but I don't know if that's necessarily news. I mean, it floods.
Yeah, it's not news, but if you ever read Revelations, like there's a lot of talk about that, and I don't know, it's hard not to make that parallel.
I hear you.
A lot of natural crazy things going on, and then the hurricane.
Yeah, I'll help, Chris. So the hurricane out in Hawaii, we actually spoke to one of our Private Money Club clients that was out in Hawaii. She presented on Monday, on Money Club Monday, has a deal that she's working out there. Super cool, by the way. And by the way, if anybody is interested in real estate and getting on the investor side, taking advantage of the market, it's one of the things we talk about a lot, Chris, is you can make money in real estate anytime, but when you know how to invest properly, there's a lot of money to be made in volatile times. It's like that in any markets, really. And so
I think like Private Money Club is a really good, and you see it firsthand, but so do I. I mean, like there's less deals posted on there, but if you look through the borrowers that are posting the deals, like I know the names, like these are the good ones, right? Not all of them. I don't want to, give misinformation that everybody that posts a deal on there is good, but like literally like the ones that are on there have been on there for a while. We've never heard of situations where they're not paying. So like I think all this stuff going on with real estate, interest rates and everything is kind of flushed, a lot of the risky drivers, if you will, out, and you kind of are left with the creme de la creme, like you just mentioned. And that's actually not a bad thing. I wouldn't say it's a great thing, but it's not a bad thing at all, as long as you know what you're looking at. But if you get a lot of the, they always say when the tide goes out, right, you see who's swimming naked. And we're seeing a lot of Ponzi's, and a lot of people were swimming naked. This is probably one of the, I read somewhere, like one of the periods of time where there was more Ponzi's in this last little boom cycle than ever before. Yeah, it's just scary, but hopefully it's almost to the end of it.
Yeah. So it's, bringing that up though, she had a deal in Hawaii. So I thought that was interesting. She was talking about the storm, how where she was, it wasn't as bad, but they did get hit hard. I mean, somebody did lose their life, got swept away in the flooding on the Big Island, destroyed about 100 homes, knocked out power for tens of thousands. So, hey, Mother Nature is powerful, man. I live in South Florida, so very aware of what hurricanes can do. Some sports news, Von Miller signs with the Cowboys, kind of a cool move. So we got football season in full swing right now. Preseason games going on. Regular season starts in a few weeks. College football starts up next week. So football season is always a great time. I will say one thing about living in South Florida that I do miss about living up north is football season in the fall. There was always something about when football games started and the leaves started to change colors and the weather started to cool down. It was just like that time of year. You start getting into the holidays. I do miss that a little bit because it does stay hot as hell here till about December.
Well, Stephen, are you coming to the inner circle we're doing out here in Buffalo in October?
October 1st, man. What's the weather going to be like? Good.
Probably stunning, probably amazing. Like just like you just described, the trees will start turning colors. It's so green here right now. We've had so much rain this season. So you talk about weather, there's just been so much rain, but like because it's so lush, that this October is going to be bonkers. Like it's going to be beautiful. It'll be a little bit cooler, but the waters are still warm. So like we'll probably go swim in the lake, see who can swim across the lake the fastest. And, we'll do that, but it'll be cold out, but the water will be warm. And it's just, you get that, there's a smell in the air. There's just something with that crisper air at night that just is, I don't know. I will have a hard time giving that up if I ever move out of New York. I hate New York, but I love like the Four Seasons and just the green and everything else. Beautiful.
No,
beautiful.
It's going to be super cool. I mean, and it's an event we don't do very often, which by the way, there's a few tickets.
Is it sold out or is there seats now? It was sold out, but I think a couple people backed out.
Yeah, Shauna said that there was we had a family of 4 that was coming that attend all of our events, some great clients of ours. They unfortunately had something go on with their family. They have to fly out of the country. So they're flying over to, I believe.
So there's 4 tickets available.
So there's 4 available. This is something we haven't done. When was the last time we did a small inner circle? Like 3 or 4 years ago? I mean, it's been
3 years ago, a long time.
3 years ago. It's been a few years, but it's an event we don't do often. But it's Chris, myself, our executive team, our wealth advisor team will be there working with about 20 of our clients very closely, going through financial situations, getting feedback from the group, and just building relationships, having a good time. So
it's super intimate.
Yeah, typically we do this for like $5,000 to $10,000 per person. For some reason, this one's $1,500 for a ticket, and we're like giving you guys all the everything. So it's basically just covering
the tickets for $5,000. They're $1,500.
Yeah, $1,500 for this one.
Yeah, we've never done. Wow. Okay, so we're guaranteed to lose money on this one.
Yeah.
Anyway, just joking. It's just like
yeah, give us a shout.
Yeah. All right. I put it over there in the chat. If anyone's interested, just email Shauna at chrisnaugle.com. I just got this. This is more world news, and then we'll wrap with the rest of the stuff you want to talk about, Stephen. But Iranian foreign minister says Iran is in control of the situation against the U.S. There you have it. Probably fake news, but they believe they're in control. Maybe they are, Stephen. Who knows? All right. Well, what are we gonna wrap this thing up with?
I got this crazy story. Let's finish with what the F.
We'll do it live.
Oh, one of those. I don't know which intro it is. All right, here we go. This is the what the F. Sorry about that. So this is a crazy story. I just want to bring it up real fast. So this like top-notch fraternity student at Penn State, being nicknamed Pablo Plejskobar. So this guy, he's a Dean's List student, accounting major, fraternity leader at Penn State, who kept a blog talking about his passion for numbers and financial storytelling and how he wanted to be a forefront on the financial landscape. He was cutting his frat brother's hair on the side for extra cash, just a model student in front of everybody's eyes. Behind the scenes, this kid was allegedly the top cocaine dealer in the entire campus, running kilos of cocaine out of his Sigma Chi and Delta Epsilon houses, making regular supply runs to Philly and New York, and using actual pledges for the fraternity to cut and bag the products as part of their initial indoctrination. So literally selling full kilos, became the kingpin of cocaine. And look at this kid, Chris.
Oh my gosh, he looks like a cocaine runner.
So this, I guess, supposedly the feds were tracking this for 2-3 years. They just arrested him, denied him bail. I mean, that's the basics of the story, but I had to share that one because it's like, sometimes you never know, Chris. You never know, man.
Well, you never know. And Gen Z is another one that you never know about. So, there's an article I know where Gen Z, it's actually a statistic. Gen Z is redirecting 401k contributions to sports betting. This is right up your alley, Stephen. You probably should do this too. Like, no more 401k contributions for Stephen. Just bet on those sports that you're always talking about. So what's happening with this story?
Yeah. Did you see that with the, let me pull it up.
I don't know the numbers. No.
Now, this was really interesting though with the sports betting. Here it is.
It was a survey, right?
Yeah, and then there was this guy that came on the news, and he said he ate from Costco's free samples every now and then, splurging for $1 hot dog for like 18 months just so he could spend all his money on more sports
gambling. Yeah, gambling. I was like, wow, this guy's got something going here. And then he's just so he could spend money on gambling.
It's crazy. So this is saying Gen Z redirects retirement savings into sports betting. More than half of Gen Z investors, 52%, redirected money earmarked for investing into sports betting over the past year. 26% call it a deliberate part. 1 out of 4, Chris, 1 out of 4 young people, a deliberate part of their long-term financial strategy. I don't know what I'm doing teaching IBC. I guess I should get into teaching.
We got to change direction.
Just over 30% said sports betting isn't part of their activity as well. Well below 63, who said came across the full sample. The shares dropped steadily with age to 31% and 14% for millennials. So as they get older, it's not part of their long-term financial strategy. Thank God. But young people seem broken in this country right now, Chris. Young people are becoming socialists. Young people are betting their futures on sports. What is going on, man?
Well, we have such a hard time attracting young folks into IBC and Private Money Club, and that clearly is why we need to redirect, Stephen. We need to get our teams focused on teaching sports betting and the algorithms and the different strategies around how to win in the sports betting industry. Any of you think that's the direction we should go? All right. Well, I guess we're just not going to have a young audience, which we don't. You know, the majority of our clients, the thousands of clients we have, are between 50 and 70 years old. So like we definitely serve an older, more wise, or older and wiser demographic than Gen Z. No disrespect to you Gen Zers. There are the outliers that are doing the right things like Marius, but yeah,
it's rare. I mean, look at this. San Francisco High School, where 94% flunk math, is California's highest Berkeley acceptance rate school. So a school that 94% of the people fail math is being accepted to Berkeley at the highest rate. I mean, things just seem to be broken. This story just came out from the New York Post yesterday. I mean, wild, huh?
I have no idea.
Anyways, we're going to keep on our mission of educating people the right way, sound financial strategies, how to guarantee their wealth growth, how to eliminate wealth killers from their life. Chris, I feel like with everything going on in this world, I mean, just with this show today, reading some of these stories, we need to like double down and triple down on our mission and just make sure we're reaching more people. We're making people realize what reality is like in this world. And for those of you that do follow along, thank you, and share it. Share it with the people you care about, because I guarantee you one thing, all this socialism, all this stuff, colleges accepting flunked out students, everything going on it's not going to end well in the long run, man.
Well, I'd be remiss not to end this show on grizzly bears and snakes, pythons, and monkeys. But let's just hit those 3 topics.
Yeah.
A little bit of
we have a escape.
What the had to do it.
You found it. Good. All right, here's the first one. We got a Scottish zoo escaped Japanese macaw. How do you say that? Macaw monkey. I need what's his anyways, it returns home. So a Japanese macaw monkey that escaped from a Scottish zoo returned to the facility on his own and is now safely back in his habitat, Chris. So the monkey's safe. I don't know. That's all I got. In other news, a grizzly bear, let's share this tab instead. A grizzly bear escapes an enclosure at a zoo in Alberta. Let's see. It's a pretty good sized bear. The Wilder Institute's Calgary Zoo in Alberta revealed a 1-year-old grizzly escaped from its enclosure for a brief time before guests arrived. Imagine walking into a zoo, Chris, and a bear greets you at the entrance.
I would love that. I'd be like, "What's up, dude?"
What's up, dude?
All right, a lot of bears around here. I'm not scared of bears.
Another escaped animal, escaped python.
I don't like snakes.
Fire at a Virginia middle school. How does that happen?
I don't know. Why don't you explain how that happens?
Firefighters in Virginia said a fire that damaged 8 classrooms at a middle school was sparked when an escaped python knocked over a heat lamp. Bad python.
Bad snake. Bad.
Firefighters were greeted by an 8-foot python. Crews safely secured the python into a temporary holding area until the owner arrived to get it back. And let's see, a bear breaks into a home in Kentucky. These animals are going wild around here, Chris. What's going on?
They're hungry, man. I don't know.
Do you guys get bears and snakes in New York?
We have snakes, but nothing really that will hurt you too bad. You know, and I try to just avoid anywhere or anything that even, you know, has any inkling with snakes. I swim the lake, but I try to block out that I know there's water snakes. But then bears, yeah. You get down in Cat County, like, you know, by the ski hills, tons of bears. I've seen black bears going up the lift. Yeah, as long as they don't have young, you don't really have much to worry about. They're more scared of you, but don't feed the bears.
My brother actually sent me this just 2 days ago. This is his neighbor's house, and they had a big bear walking by. It's a 500-gallon propane tank for reference. Whoa. Check that out, man.
A big black bear. Well, he wants some Kentucky Fried Chicken too, man.
They're out there. He wants that Kentucky Fried Chicken. That's right.
Yeah,
that's right.
That's what they want.
It does bring up a big topic we did not hit on today that we probably should, because it's all over the news right now. It's very controversial, and I made it think of it with the Ring cameras, but it's the flock cameras. The flock cameras are a hot topic right now. You know much about the flock cameras, Chris?
What is that? What is that?
All right. We're going to leave that for next week. That is the Big Brother
all right.
disguised as safety. I don't know what side you guys fall on, but we'll save that one for next week. So get your thoughts together on flock cameras, and we'll hear from you next. What the F, Chris?
All right, folks, join us this afternoon for the wealth webinar. It's going to be a really good one. It's going to be all on self-financing and how paying cash might be your most expensive option. So we're going to dissect that this afternoon, 1 p.m. Eastern. You can join by going to Chris Naugle, NAUGLE.com. There's a couple index finger swipes, and it's going to be right there in front of you. Just join Wealth Webinar, no cost. We even give you a couple of our books for free just for registering. And with that being said, I guess that's a wrap of this week's WTF. Thank you all for joining us, and we will see you this afternoon for Wealth Webinar and then Ask Me Anything Happy Hour. Till then, see you soon.
See you guys.